Hello and welcome to this video about the iShares MSCI Emerging Markets ex-China ETF, also known as EMXC. As an investor, it's important to understand the different investment options available to you and what each one has to offer. In this video, we will delve into the world of emerging markets and explore why the iShares MSCI Emerging Markets ex-China ETF might be a good option for you. Emerging markets. First of all, let's define what we mean by emerging markets. Emerging markets refer to countries that are undergoing rapid economic development and are considered to have high growth potential. These countries are typically less developed than developed countries, but they are rapidly growing and evolving. Some examples of emerging markets include countries like Brazil, India, and South Africa. Why invest in emerging markets? So why invest in emerging markets? Well, for one thing, emerging markets tend to have higher growth rates than developed countries. This means that there is the potential for higher returns on investment. Additionally, many emerging markets have a growing middle class and a large, young population, which can provide a stable consumer base for businesses. There are also some challenges associated with investing in emerging markets, including higher levels of volatility, political risk, and currency risk. However, for many investors, the potential rewards outweigh the risks. The iShares MSCI Emerging Markets ex-China ETF. Now, let's take a closer look at the iShares MSCI Emerging Markets ex-China ETF. This ETF tracks the MSCI Emerging Markets ex-China Index, which includes stocks from emerging markets around the world, excluding China. This provides investors with exposure to a diverse range of emerging markets, without having to worry about the risks associated with investing in China. The ETF is managed by BlackRock, one of the world's largest asset managers. This provides peace of mind for investors, as BlackRock has a long history of managing successful ETFs and has a reputation for providing quality investment products. The ETF has an expense ratio of 0.59%, which is in line with other similar ETFs. This means that the cost of owning the ETF is reasonable and won't eat into your investment returns. The iShares MSCI Emerging Markets ex-China ETF follows a passive investment strategy. This means that it simply tracks the MSCI Emerging Markets ex-China Index and does not attempt to outperform the market. This approach is ideal for investors who are looking for a simple, low-cost way to gain exposure to emerging markets. So what kind of companies does the ETF invest in? The ETF holds a diverse range of companies across different industries, including financials, technology, and consumer goods. Some of the largest holdings in the ETF include Samsung Electronics, Tata Motors, and Brazil's Itaú Unibanco. The ETF is rebalanced quarterly to ensure that it remains aligned with the MSCI Emerging Markets ex-China Index. This helps to ensure that the ETF continues to provide a representative sample of the emerging markets ex-China. So how has the iShares MSCI Emerging Markets ex-China ETF performed over the past few years? The ETF has provided strong returns over the past 5 years, with an average annual return of 8.51%. While past performance is not a guarantee of future results, this is a positive sign for investors who are considering the ETF. Conclusion. In conclusion, the iShares MSCI Emerging Markets ex-China ETF, also known as EMXC, is a good option for investors who are looking for a simple, low-cost way to gain exposure to emerging markets.